What is going on, YouTube? I am finally moved into the new place and I got my own little content room set up now. There's nothing in the background. I literally just moved in, but I wanted to make sure to get this video out, and I'll continue to put out as much content for you as possible. But all I ask is one thing, is to literally just like the video. So before we get into it, really quick, we're going to cover three things. PCE reading that just came out today. We're going to talk about Celsius stock, what's going on with that stock because it's been going on a crazy run. And then we're going to talk about Alibaba earnings, and that stock has popped as well, and that's been doing really, really good so far. So I spoke about PCE, I think in the last video, or it might have been 2 videos ago. So I don't really want to just go too in depth about that, but just to update you. So we had core PCE. This was our last reading before the next Fed meeting that's next month in April. So this is going to tell us, are we going to get a rate cut or not? This is the metric that they look at, right? This is the personal consumption and expenditure, right? So this is kind of showing you like where all the money is kind of flowing in the economy. And it kind of accounts for more things than just like your traditional CPI reading. So this is the metric that the Feds look at. And we basically, month over month, we came in just in line at 0.3% increase. So nothing really surprising there. But this is the last one, and I believe we're going to get a rate cut in September. So it's going to be interesting to see. I think we have that meeting with the Feds in 2 weeks. So Celsius stock, see how this is doing really quick. So we're up at $62. So for those that, I don't, whether you've been following me or not, I started buying Celsius last year, at the end of last year in Q4. And I think I started a position at like $35. And then when it went down in the 20s, just kind of started to continue to buy. I think I brought my average down to like $31. And then I sold all of it when it hit like $46. So sold a little bit early. But look, I like the business. I think Celsius is a great stock. Just at the time when it was running up, I wanted to free up some more capital because I was happy with the gains that I had, and I just wanted to free up some capital and kind of just sit on more cash. I like taking my profits. I definitely left a decent amount on the table. I definitely sold too early, but it is what it is. But really quick, this is still a company that I like to follow. So we're at $62. Right? So over the last 6 months, the stock is up like 120, 20. Let's just look at year to date. I just want to look year to date actually. So year to date, stock's up 132% year to date. So the stock has taken a beating last year. If you remember, if you were following the sentiment around Celsius, a lot of people, there was a lot of bad sentiment around the company, basically just saying like, the growth story's done. It's dead stock. And basically if you buy, you're just going to continue to be exit liquidity. And believe I spoke about this in one of my other videos, is it's so easy to get caught up in narratives because of the stock price of a stock, right? Like Celsius is one of those stocks where, again, you're going to see some decline in growth, and then there's just so much sentiment around them that's like saying, it's a dead company and they're going nowhere. And again, it's just another contrarian play that I made, right? And it just goes to show that some people, they don't know what they're talking about, and they like to just construct narratives around the actual stock price, and they're not looking at the business itself. Right. So this is what's happening today and why the stock price for Celsius is going up today. So Pepsi decided to expand their stake to 11% with $585 million. Now, what they're doing is they're giving Celsius the rights to their Rockstar brand. So Pepsi owns Rockstar, the energy drink brand. It's not really a big brand, honestly, compared to, Red Bull, Monster, Celsius even. It's not really big, but they're giving Celsius control over the US and Canadian markets. I don't know what other markets Rockstar is even in off the top of my head. I don't really follow them. But Celsius is going to take control of that. and take care of the distribution in those countries, while Alani Nu is going to actually have some distribution through Pepsi. So again, like, this is something I talked about, is like the Pepsi partnership is what gives Celsius the advantage. Now, if you're looking at Red Bull and Monster, those are like behemoths in the energy drink market. We already know that. But it's such a competitive industry, and when you're looking, just take Monster and Red Bull out of the picture, and just, there was Alani Nu, there was Celsius, there was Rockstar, or is Rockstar. I can't even think of any other ones off the top of my head. There was Bang energy drink, there was like C4 or something. Like, there's so many out there. And what separated Celsius from a lot of those tiny competitors was their partnership with Pepsi. And Pepsi taking care of the distribution for them, or helping take care of the distribution for them, it helps them increase their margins, which means they're going to make more money, right? And Pepsi's such an established company, especially in the United States. It's a huge partnership. And again, last year, a lot of people were saying Pepsi's no longer interested in Celsius. I don't know why. When you listen to Pepsi on earnings calls, they were getting asked, are you still interested with that partnership in Celsius? And they said yes. So again, stock price, narrative will follow the stock price all the time. But this is a strong move. This is a very strong move. Celsius they're in growth mode. They're back in growth mode. They're doing their acquisitions, and it's starting to really pay off. Alani Nu is starting to look good for them in that last earnings. And just really quick, this is what I spoke about. This was in October of 2024. Kind of just touched up on how their growth looks good, and there was a slowdown in the overall drink market, but the energy drink market isn't taking as big of a hit. And then you have your sugar-free drinks that are really becoming more popular, right? And then Celsius is the clear number 3, behind Monster and Red Bull. And I kind of just spoke about it, but their advantage is they have Pepsi on their side, right? And the 3 things were market share, category growth, and then the Pepsi partnership. And those 3 things are really starting to come together, and it's starting to pay off for Celsius. And I see Celsius getting back to like $90. I don't know when, but I think it will happen. But if you're a holder in Celsius still, then congrats. You've definitely, especially if you held it all the way down to the 20s and didn't sell, you definitely deserve the gains on that. All right, so now I just want to dive into Alibaba earnings really quick. So Alibaba I still hold Alibaba stock right now. It's not a lot in what it was when I think I bought this stock back in, let me see. So my average in this is $68. So I've been in this when it was about $68. I literally just bought one time, and I don't even think it dropped any further. So I really didn't even have a chance to really dollar cost average. For me, I don't really like the dollar cost average up, right? And I kind of just like to average. If I buy something, I really only like to buy more if it goes below my buy. So I was in at $68, and it kind of just went up from there. And I sold the majority of my stock. I think I have it's not even a lot. It's like 35 shares. But the way I look at it is, I think Alibaba, it can get to like $250, $300. If it gets to $300, I got like 30, 35 shares. That's like $9,000 right there. That is just kind of just sitting there. So I'll just let the rest ride out and see what they do. But really, really good earnings, in my opinion, from Alibaba. Now, whether they missed on revenue, earnings per share, I'm not really worried about that. It's the guidance of what they see in the future, but also just like looking in their individual segments of their business, the cloud business, obviously their e-commerce business, and just the whole, like, what are they doing with AI? And this was the big headline right here that I kind of want to touch up on, because this is interesting. So they developed a new chip to help fill NVIDIA's void. So the way I look at this is they're trying to really be the Nvidia of China, in my opinion, right? If they're able to really take this opportunity, because you have all this tension between China and like the US and Nvidia on these chip sales, and you know we can only sell China these chips, those chips, whatever it may be. I don't think China wants to deal with that, especially when they can have their own chips being made, and they don't have to just rely on uh, an American company, right, to kind of just like sell them the chips. So, I think Alibaba has a big opportunity to really capitalize on this. And now this says that they didn't respond to routers. I don't even know how to pronounce that, but when that article came out. But you see here, right, the H20 chip, it's basically a lower version of their Blackwell chip. So it's Nvidia's. It's a good chip, but it's not the best of the best. And China they don't really want to do that, right? So from what I was reading is what this chip that Alibaba made, they're able to integrate that into some of Nvidia's like software and stuff like that. Like it works fine for these other companies. So if Alibaba can continue to develop these powerful chips so other Chinese companies can use them, or even other American companies, and they're like, hey, like we made this chip, you're able to integrate this in whatever software you're currently using, and we'll give it to you for a little bit cheaper. This can really spark like a lot of competitiveness in the market. And at the end of the day, Nvidia doesn't really need China. I think we even like saw that in the most recent earnings that they reported, that which is why they gave guidance for non-China included and China if they were included. So I really don't even think Nvidia really cares that much. I could be wrong though. I could be wrong, but this is a really big opportunity for Alibaba. So it's going to be really interesting just to see like how this plays out over the next year, because now's the time where Alibaba really needs to like capitalize on this. But really quick, I liked Alibaba because they've been doing a lot of share repurchases. So I'm not really going to get into that, but there is a segment here where that's their e-commerce business. I don't want to talk about that, but their cloud intelligence right here. So the revenue right here for their cloud business. So they had 26% growth year over year, which is great. So that 34, I don't even know the currency that they use, but converted, I looked it up earlier. It's like $4.4 billion in revenue. I looked it up earlier. So which isn't a lot, but if they're growing in the mid 20-ish% just for their cloud business, right? Let's just call it 25%. Over the next 3 years, that means that they'll be sitting around, I think, $8 billion in revenue for their cloud business. I think 9 or something around there just by 2028. So look, it could even be more, honestly, depending on how they really capitalize on this opportunity. But let's just say 25%. I think that's a realistic number. Let's just say this gets to a $10 billion business in their cloud, just their cloud. I mean, you can look at this along with share buybacks. You can really see this stock really start to grow over the next couple of years. So I think like you don't want to sleep on Alibaba. I think they're just one of those companies that are just really slept on because of the whole geopolitical risk. And I've talked about that when they were all the way down at like 68, $70. There was a lot of just like, oh, it's too risky. You look at the last Trump term that happened, you could see the stock price and what Alibaba did. So again, take the geopolitical risk out of the equation. I really don't think that's the way to look at it, because either way, you missed out on all those gains when it was, $58, $68 since 2023 or whatever it was. And then another strong thing here was their AI related product revenue maintained triple digit year over year growth for the eighth consecutive quarter. They're doing something right. They didn't disclose if it was like 200%, 300%, 100%, but still to have eight consecutive quarters, to have triple digit growth, it's pretty insane. So they're doing something right. I think give it like another 6 months to a year, and we'll see we'll come back to this and see where their cloud business is. But yeah, a lot of good things. 10% year over year revenue growth with the top line. That's excluding Sonar and Time. E-commerce customer management revenue up 10%, and then their cloud intelligence. We just talked about that 26% year over year growth. They have a lot of things going for them, but yeah, that's pretty much all I wanted to cover with Alibaba. I'm just letting the rest of my position kind of ride out. I think they have a really big opportunity to capitalize on this AI growth and that whole thing. So we'll see how they continue to spend their money, and it should be interesting to see over the next year. But that's all I have for this video. I hope you enjoyed it. Please make sure to like this video, and I'll see you in the next one.